This video discusses equity financial ratios. One financial ratio is earnings per share, which is one of the most widely cited items of accounting information. Earnings per share is calculated by taking the amount of net income, subtracting out any preferred dividends that were paid, and divided by the weighted average number of common shares outstanding. Earnings per share is widely used by investors to determine the amount of profitability per share of ownership within a corporation. The price-earnings ratio reveals information about the stock market expectations for a company's future growth in earnings, dividends, and opportunities. Because it's dealing with market expectations, it does use the market value, price per share, and divides by earnings per share. Dividend yield gives us an information about the annual amount of cash dividends distributed to the common stockholders relative to the stock's market price. Annual cash dividends per share divided by the market value per share. Book value per share on common reflects the amount of stockholders' equity applicable to common shares on a per share basis. Total stockholders' equity applicable to common shares divided by the number of common shares outstanding. So to calculate the stockholders' equity applicable to common shares, the portion of stockholders' equity attributable to preferred would need to be deducted from that amount prior to dividing by common shares outstanding. Finally, book value per share for preferred is doing the same as the book value per share for common. It reflects the amount of stockholders' equity applicable to preferred shares on a per share basis. So we would take total stockholders' equity, deduct any portion of equity from common shareholders, and then divide by the number of preferred shares outstanding.